to be here with us tonight. Frank Van Lerven is head of research at Positive Money, an organization that campaigns for sovereign money here in Switzerland, well known as Vollgeld, thanks to the Vollgeld-Initiative. And Dr. Thomas Meyer is the founder of the Flossbach Research Institute and is former chief economist of the Deutsche Bank. Mr. Meyer, Mr. Van Lerven, thanks very much for being here tonight. A warm applause, please, for our speakers. And special thanks as well to Simon Schmid, who's doing the moderation tonight. He's putting forward some statements and will ask the questions and guide through the evening. And now I would like to give the word to Jessica Brestel from the Hayek Club Zurich.
Hi, good evening. I'd like to welcome you all very much in the name of Hayek Club Zurich and Students for Liberty Zurich. We are a club who've been promoting the work and the ideas of Friedrich August von Hayek for quite a long time. He was one of the most important economists of the 20th century and a Nobel Prize laureate. He was part of the School of Austrian Economics, which is a free market-oriented philosophy. He recognized the problems of central banking very early onwards and advocated for private competing currencies, something you're going to learn about tonight. If you are interested in the Hayek Club, you can sign up. We also have our newspaper that we hand out 3 times a year, and it has different topics every time. This time it was competing jurisdictions. There's also different events during the semester that you can attend. We are also, due to this history of our club, we are very lucky to have Dr. Thomas Meyer here tonight, who is a world-renowned economist, former chief economist of Deutsche Bank, and after that, as was already said, he founded Flossbach Institute. And he is one of the big advocates for Austrian economics, and we're very happy that he's going to promote Hayek's ideas tonight.
I'd like to give the word to Simon Schmid and start tonight's session.
Yes, hello. So welcome from my side as well. I'm Simon Schmid. I work for Handelszeitung. I'm the chief economist there. That means that I write about macro and economics. In case you haven't seen it, I brought a few copies of our newspaper outside. There's also an article I wrote some time ago about these topics that we're discussing tonight. We're going to start this event with 2 presentations. Each of the panelists will talk for about 10 minutes, and then in the second part it's going to be a little bit interactive. We're very glad to have you here and hope it's going to be a very fruitful discussion. So, Frank, I think if you want to start.
Testing.
Do we...
Great, it's working. I first wanted to say thank you very much for having me here. It's a real honor to be here and to come all the way from England and to be asked to be here. I am the senior researcher at Positive Money. However, I just, as a disclaimer, want to kind of put it out there that I am not speaking on behalf of the sovereign money movement. As I realized recently, we all have very different reasons for why we want sovereign money to happen. And so please just bear in mind that there's different views on how this should take place and why it should take place. And today I'm really just presenting my own personal thoughts, and those of Positive Money as well. So the first question I have for you is, do you remember studying this in school? Yeah? I studied this in school for 3 years. And the question is, does anybody here use this today for work? 1, 2, 3. Great. How about this? How long do you study this in school? I studied this maybe for a week. And I learned 2 things. One is that if the government is the government that has all control of money, and 2, when the government creates money, it leads to inflation. Those were the 2 things, and it was that simple. But we use money on a regular basis every single day, and it matters so much. You know, when we think about all the world's problems, whether it's inequality, jobs, climate change, house prices, austerity, persistent poverty, all of these things, money is involved, right? So the issue there is money. And we need to think about, basically, our monetary system. And how do we do that? We start by asking ourselves, well, where does money come from? And who has the power to create money? So, banks create almost all money we use today. They create about 97% of all money exists as bank deposits. When they issue loans, they do it by creating new liabilities, in other words, promises to pay. We then use the bank's liabilities to make payments upon each other. So their liabilities effectively function as money. Ooh, you might be thinking, show me the proof. You know, about 4 years ago, by the way, nobody really knew that banks created money. And it's becoming much more popular because of organizations such as Positive Money and Momo and other, and if you really want to ask about the proof, I think the Bundesbank just came out 2 weeks ago with a report saying that banks create money. The Norwegian Central Bank just did one as well, the Bank of England, and so you can look it up there. So what are the problems with banks creating money? I have to do this really quickly, by the way. I've just got 10 minutes. There's a lot of problems. The first one is the profit criteria for creating money, essentially, is, banks basically, the criteria for creating money is, well, is it profitable for the bank to do so? Will it make money for the bank to create money? The second one is most of the bank lending leads to financial bubbles. Not most of the bank lending is aimed at the real economy. Only about 16% of bank lending in the UK is aimed at the real economy. The other 84% effectively goes into property markets and financial bubbles. And the major problem there is that banks, because of their profit maximization ideas, they want to lend where it's most profitable and it's safest. So they tend to lend into property. And what this does is, because property prices tend to increase, lending becomes self-validating. The prices are going up, so there's more reason to lend. That leads to higher house prices and more debt, and so in like in a vicious cycle. Yeah. Banks also, they tend to create too much money in boom times, and in a recession, they don't really want to lend because it's too risky to do so. Finally, for this slide set, when things go wrong, the only thing, well, one of the major things that we have is basically to encourage banks to create more debt and to lend more. So, for example, after the 2008 crisis, we lowered interest rates in the hope to get banks lending again. This is just to give you an idea of how much money banks created in the run-up to the crisis. Almost every 10 years, they basically double the money supply. But the major problem with all of this as well is that it mixes two very distinct functions together. Money is created as both a means of payment and a means of credit. So this means that our credit and financial stability is joined at the hip with monetary stability. Okay? It puts the payment system at risk. If banks fail, the deposits that exist on their balance sheets are effectively frozen. Yeah? And the health of the payment system and the ability of the rest of the economy to keep functioning is basically dependent on the risks that banks take when they lend. Oops, sorry. Yeah. Basically, it requires deposit insurance, and we need to bail out banks when they do fail. And this equates to basically governments subsidizing banks. And because banks know that they can be bailed out and there is deposit insurance, guess what? They lend more. It's called moral hazard. And finally, there's the foregone seigniorage from banks creating money, which is the profits from creating money essentially go to the commercial banks. The New Economics Foundation just released a report based on the UK, and it showed that about, I think it's 23 billion a year is lost, or is profits foregone from creating money in terms of seigniorage for the state. So, sovereign money, how do we get there? I'm just going to give you three very quick proposes for changes, withdraw banks' ability to create money and return it to a democratic, accountable, and transparent process, create money free of private debt, spend money into the real economy before it reaches financial markets and property bubbles. This is very much what Positive Money has campaigned about for the last 3 or 4 years. But I really kind of want to take this a bit deeper and in the short time that I have. And these ideas really stem from certain institutional changes that we want to structure the banks and the central bank. And essentially, we want to move the current accounts, or what we call transaction accounts, onto the balance sheet of the central bank. And what this will do is make the payment system 150% completely safe. Yeah? If you want to borrow money or if you want to lend money, you put it into an investor's account, which is separate, and then you take the risk for that lending on yourself. So just to get into a bit more detail, the central bank provides the public with a way of holding state-issued sovereign money cash. So you would basically be able to hold an account on the central bank's balance sheet, completely safe. Yeah? This is really important because actually, if you ask a lot of people what they want money to be, yeah, a lot of people will tell you, well, when everything goes wrong, you want the money to still be there in your bank account. That is a lot of times what most people want money to be. Yeah? We can talk more about that later. Banks will be forbidden from issuing liabilities that function as money, yeah, because it will exist as sovereign money. And effectively, we're decoupling credit from the means of payment. Yeah? So, like I said, the payment system, 150% safe. In this system, then banks would be completely allowed to fail. Yeah? The idea would hopefully be, if they are allowed to fail, then they'll be more cautious with their lending. They might not be, but then they fail. The other thing is that it ends the subsidies and the moral hazard involved with the government subsidizing bank lending as it stands today. Completely remove that. And again, then the risks that banks take might be a little less. Yeah. The other point, less risk will allow more entrants and competition to come into the banking sector. Yeah. And finally, changing the tool of monetary policy to money creation. Yeah. Instead of having banks lend and create money, and that's the way we get money into the system, we would spend money directly into circulation. The central bank would create money in line with the needed spending for aggregate demand, transfer that to the Treasury, and the Treasury would decide how to spend that money in. It could either give it to a check in the mail to everybody at the end of the month, it could use it for infrastructure spending, or it could use it for tax cuts. Yeah? The most important thing about this is that you're getting money into the economy without anybody having to take on new debt. Yeah? So it's a debt-free source of income for the private sector. Every time the Treasury would spend the money back into the private sector, the net financial assets held by the private sector would increase. Yeah? So you're boosting incomes without anybody taking on more debt. Monetary policy would become more direct and more effective. You would be spending money directly into the real economy. The Bank of England says it takes about 2 years before when it uses interest rates for the actual effect to take place. 2 years. Yeah. You'd have more macroeconomic control over money creation. Yeah, money would be spent directly, like I said, into the real economy rather than into the property sector. And yeah. And finally, the state would be able to retain all the benefits from seniorage. Yeah, so this would effectively be an extra 23 billion a year for the UK. Yeah. I guess, was I allowed to take questions? I don't know.
Okay, maybe I'd like to ask you just 1 or 2 follow-up questions. What I wonder sometimes when I read articles and papers that come out of the Sovereign Money Initiative and others is, why are you guys so obsessed with money? Everything is fine, isn't it?
Okay, that's a great question, and the main reason is that it has to do with actually there's a massive misunderstanding with how money works and how money is created. If you look at most economic textbooks and the general public, they think that the money that exists in their bank account is the same as cash. They don't think it's a promise to pay cash or a promise to make a payment on behalf of the customer. And this is a massive issue. Also, most macroeconomic models, they treat this money as if it was, or bank lending, let's put it that way, as if it was equal to savings, rather than banks being able to lend as much as they want to, as long as they do so in step. Yeah, and those are the main reasons that we think we need to make noise about money. We did a survey in the UK, and I think, what was it, 9 out of 10 politicians didn't know how money was created. We did surveys of people, and about, I think it was something like 80% of people also did not know how money was created.
So it looks like we have a way that the system works, and it looks like we have a misunderstanding of how that system works. Why don't you just want to educate the people on how the system works? Why do you want to change the system so that the system matches the misunderstandings?
So why do we want to change the system? I guess is that.
Yes, you could. I mean, you have a way that it works, and you have a misunderstanding of that. And now you can either change the way it works, or you can change something about the misunderstanding.
Yes.
Why would you choose to change the system?
Well, yeah, the two are definitely not mutually exclusive, in my opinion. This is a very difficult thing with our campaign, which is that we have to educate as well as try and campaign for monetary reform. So it means that we have many allies in certain respects, because they like the idea that we create awareness about how money is created. But some people don't, or maybe they like certain parts of our reforms, but they don't like the full extent of the reforms. As to why the system needs to be changed, there's two really important ones for me. And one is full protection of the payment system and knowing that your money is safe. And coming to that, if I've got 1 or 2 more minutes, in the UK, it is law to have a bank account, which effectively means that when you get paid, you are being the creditor of the bank. So by law, you have to be a creditor of a bank. And by law, you have to take their risky promises to pay. Why? If it's by law for me to have a bank account, I should be allowed to have it as a safe held at the central bank, not administered by the private sector, but held on the central bank's balance sheet, so that it is completely and totally safe. The second reason is this idea of having a debt-free source of money coming into circulation, so that if the government wants to run an austerity program, and if banks don't want to lend, then we can get spending and boost aggregate demand without anybody having to take on debt. And I think that's fundamentally important.
I think Thomas has also something to add to that question.
My answer is very short. As every Austrian economist would immediately see, the credit money system creates credit and economic cycles. So this is the source. This was the source, the main source of the financial crisis. It was the main source of the depression of the early 30s. The interesting feature is only that the cycles are so long that most economists forget the lessons learned from the last bad event, and they go on doing the same thing over and over again. Right?
I think you give economists too much credit there. I'm not sure their memory spans that long.
That's what I say. That's okay. Therefore, the system goes on and on.
Okay, so let's have your presentation, Thomas. We're very curious to see your perspective.
Okay. So my presentation is going to be a challenge. for me, because you shall see a one-handed economist using two hands to go through the presentation. And it's going to be a challenge for you because I'm going to walk you through balance sheets. So the public-private partnership of money production. Now, this way it goes. So now let's have a look at this. Once you have understood this balance sheet, you're going to easily follow the rest. What we have here is the balance sheet of banks in the above, and the balance sheet of the central bank below. And our bank gives credit to non-banks, including the government, and it has reserve money at the central bank. This is on the asset side. On the liability side, it has money deposits, savings and time deposits, and has credit from central bank. Then it has equity. The central bank has, as you can see, credit to banks, foreign exchange reserves, reserves to money deposit banks, cash and equity. So far, so good. Just take 10 seconds to digest this. So how is money created in the credit money system? Well, look at this arrow. The banks give credit to people and pay the credit amount into their deposit, right? They also need, in order to facilitate interactions among themselves, reserve money. So what do they do to get the reserve money? Well, very simple. They ask the central bank to get a credit, right, which they have on the asset side as reserve money, which they pay back into the account at the central bank. So these are two circuits of money, one a private money circuit and one an official money circuit. And this system, as Frank has pointed out, has led to instability and recurring financial crisis and economic crisis. And as I said, the problem is the cycles are very long, so that once a crisis has occurred, people mull over it, like in the 1930s. They talk about remedies to it, Chicago plan, I'll come to this. They talk, and then things are getting, people forget things, and then it takes a long time until it occurs again. The same cycle, we talk a lot about it, we need to change the system, things settle down, and we forget again. So we'll never get out of this circuit if we don't really discuss attacked and sometimes pulled in and sometimes taken over by powerful interest groups, which then will use the ability of money creation to their advantage, not to the people's advantage, to their advantage. One could say, if you are a Misesian economist, well, let's go back to the gold backing, but I think the window for gold-backed money basically has closed. We have gone through this discussion. I don't think that we can reopen it. Gold is just as a stock for money backing is just tainted. Mr. Keynes has seen to that. So I think it is not a useful way to go forward. Private money created not based on a commodity but on trust, on goodwill, is, I think, in need of competition for high quality. You cannot have this issued by any single entity, not by a central bank, because they will simply issue whatever the interest groups would want them to issue. But if you have these currencies issued in competition, then the optimal money stock will be decided through competition. The issuer will have an incentive to hold back issuing if people abandon his money. And I think the cryptocurrencies are basically a door opener for currency competition. We have already currency competition. Bitcoin competes already with other currencies, and not badly if you look at the price that it has. What the interesting thing is, when you think about it, you can actually use cryptocurrencies and blockchain technology to pay the user for that. Right now, in the Bitcoin algorithm, the miners are paid. Right? It's a decentralized way to create money. But people are also experimenting with central blockchains. So think about having a money issuer in competition with other money issuers using a centrally managed blockchain, which is faster than the decentralized Bitcoin blockchain. And he says he has a few dedicated miners which can process the payments more effectively. And he basically returns the seigniorage that Frank says presently accrues to the commercial banks and in the sovereign money system should accrue to the government. He can return the seigniorage to the users, like air miles. If I'm a user of X coin, part of the seigniorage, if this is becoming trustworthy and more people use it and the money stock expands, part of the seigniorage is returned to me as a bonus payment, a dividend payment at the end of the year. So currency competition actually, I think, is a way to produce the optimal, the best currency for the user and not for agents like politicians. That's my point.
I would like to ask also one or two follow-up questions on that. The last one, it occurs to me that if you look at the world and we're talking about the competition of currencies, isn't that what we already have? We have Swiss franc, we have euro, we have dollar, Australian dollar, Canadian pound, etc. So isn't there already competition of currencies?
We have presently currency competition of sovereign monies. No, we have currency competition of credit monies, right? So this is the private-public partnership of money production. We have that on an international scale. But on the national scale, we have this concept of legal tender. Right? So this concept prevails here, it prevails also in the euro area. And it gives basically the government the right to license banks to produce surrogate money. Without a license, if you would do it, you're committing fraud, right? So the government basically runs the system, and so you have only competition among different credit monies that are government licensed. What I want, what I think is good, is to have now free competition among issuers. And you can have this due to the advancement of electronic payment systems, especially of blockchain payment systems, because there you have peer-to-peer payment. You don't need banks anymore for the payment system. The banks can do what the textbooks, the economic textbooks say they do, i.e. collect deposits and use that as a base to extend credit.
From your comments, I noticed that you are worried about cycles, about credit cycles, or possibly about asset bubbles as well. What makes you so sure that with currencies like Bitcoin, we won't have any bubbles?
Well, the answer basically is that you cannot die from a car crash if you're not traveling in a car. You may die from other things, but not from a car crash. What do I mean with that? Look, the credit money system creates inherent instability because when the bank extends a credit and gives the money created by that to someone, right, who then uses this money to, let's say, make an investment, it's completely open. Whether the money now used for the investment, that the new guy that got the money used for the investment is being backed by other money that someone else does not use for consumption. So what you can have is, this is loosely speaking, a double use of money for a while. You use money for consumption and you use money for investment. And as time goes on, the more you create in this double use of resources, resources for investment and resources for consumption, the tenser the system gets. When the system gets tense, interest rates rise. And when interest rates rise, the projects that you commence, that you began with the new money, become unviable, and it crashes. And when you look at this, you have seen it in the 1930s. There, people funded equity investments with new money, and when the price of money, the interest rate rose, the investments crashed. And you could see it now with real estate. A wonderful example is Spain, where you can see that with new money, lots of houses were started that couldn't be completed. Yeah? And then half the way, when it dawned on the economic agents that they didn't have the resources to build, to complete the houses and go on with consumption, the whole thing crashed. So my answer to this is the credit money system is inherently unstable the way it is built. Now what I'm not claiming is that when you move over to the opposite, whether this is sovereign or private fully backed money, I'm not saying that you will not have economic cycles. I'm not saying that you will not have asset price bubbles. We had tulip price bubbles in the Netherlands in the Middle Ages. You can have that. But this is a contained affair. We had such a tulip price bubble in the tech stock equity bubble in 2000. When that crashed, it was not of a serious consequence. We did not have a serious recession after that crash. It was a dent in economic developments because these tech stock bubbles were not bought on credit. No one in his right mind would give someone credit to buy back at the time the equity of a technology stock. Real estate was different. Real estate was purchased on debt, and that created a big, big mess.
You have any comments, Frank, on this issue? Would we have possibly bubbles with cryptocurrencies, and possibly would these bubbles take on some of their own dynamics, which when they plop would cause disruptions in the economy?
Well, in my opinion, I guess it depends on what kind of alternative currency you want to create. And I think to that extent, if it is one that is credit-driven or it is based on debt, then you can have that an alternative currency in that respect to a minimal degree. I think it's when this credit-backed money starts, whether it is current bank money or if it would be an alternative currency, when it starts to get to a certain level that it gets widely accepted as a means of payment, then you start to fall into danger there. And I suppose the questions then are when certain bubbles are pricked and the economy maybe crashes, what happens then? And because you want people to keep on making those payments. Yeah. So on the other side, if you had alternative currencies that are backed by sovereign money, and so it's one for one, then I don't think you have an issue there, in my opinion, in terms of, and the payment system then is fully protected.
Okay, let's shake this up a little bit. This is a little bit of an interactive exercise. Since we are here in Switzerland, we vote on everything. This is the part where you have to switch on your brains again. I prepared a couple of statements that I often hear and read in these articles, and their propositions. And yeah, your assignment is to tell us if you think, yes, that's true, or if you think, no, that's wrong. Green is for true, and the red is for wrong. So let's just do a quick test question on that. Okay, the test question is, the face value of the new banknote introduced by the SNB today is 33 Swiss francs. Red if you think it's wrong, green if you think it's true. Okay, we have one person who hasn't watched the news. Yes, it was 20 francs, the new banknote issued today. Okay, let's get to the real deal. Let me come to this statement here, and I read it. It was already said 2 or 3 times today. The statement goes that banks are making unjustified profits because they can create money out of nothing or out of thin air. Do you think that's true? Do you think that's wrong? Okay, we have about 2/3 of green cards and 1/3 of red cards who don't think that's true. So. All right. So I want to invite our panelists to say something about that. And maybe Thomas, would you like to pick up on this comment? Maybe are there profits, and are they justified?
Well, basically, what the banks get is part of the seigniorage for money production. This is why I called it in my presentation the private-public partnership of money production. Why is that? Because the governments or the authorities basically lost all credibility in money creation because they overdid it. They created inflation, and so people felt that lost their trust in this money, and then they came up with this idea to basically outsource the money production to commercial banks who are held in higher esteem, or were held in higher esteem by the public than the authorities who directly issued the sovereign money. By the way, this already was a problem with the Romans. When you look at the debasement of the dinar, which had about 100% silver content around 50, 60 past Christ, and was down to 5%, I think, in 100 and 200 or so, or 250 past Christ. Yeah. So this is basically the reason for it. Is that justified or not? I would say it's part of the system. This is how the government decided to basically continue to run a system which I think is questionable for the reasons we discussed.
Now, Frank, I think you would probably agree with this statement. And I think maybe it was you or other authors even came up with an estimate for a concrete specific number, right?
Yeah. The New Economics Foundation came up for the UK 23 billion that we're losing, or that's profits that have been foregone in seigniorage on a yearly basis. I think my thoughts on this, just in terms of, I think, first of all, it's important to remember that I'm not against bank lending or profits at all. And there's many financial institutions that don't create money out of nothing, that are actually, you know, charging high levels of interest rates. In the UK especially, we call them payday loans to poor people, and they charge, you know, like really, really high interest rates. And those kinds of profits, you could say, are unjustified as well. And the only thing that I would add is the subsidies that banks get from deposit insurance and from too big to fail. And in that respect, there is no, you know, the shopkeeper over there or the kebab shop on the side of over there, if they go insolvent, they don't get bailed out. And so I guess that would be an issue that I think about a lot as well.
Mm-hmm. But what about the cost of money? Money is not for free. Money costs something. Somebody has to give you the infrastructure for your payment accounts. Somebody has to put the ATMs there. Somebody has to bring the banknotes to the empty ATMs. Isn't that, if there are profits, then there is also there is an actual real activity
absolutely
that you're supposed to pay for, right?
Yeah, absolutely. And let's be clear that, so I went to school, all my friends work at banks as well right now. So they do a service and they deserve obviously to get paid. And the question is to the extent of, you know, when we look at what teachers, nurses, doctors are getting paid right now versus people in the financial sector and the amazing service that they give us. And you compare those two things together, and that's I guess the question that I would pose to you in regards to this. Yes, I think, you know, they do an important function. Also, there's savers who will put money into an account, and that's important sometimes for the bank's capital, and they need to get their money. So. Yeah.
Mm-hmm. But what about this issue of competition by banks, Thomas? If we have competition in the banking sector, then theoretically there shouldn't be any excess profits in banking, right?
The banks basically have used the seigniorage they gain from money production to attract customers. This is why we have moved from an environment in which, as I can remember this, the older ones in the audience will do that as well, where you had, and the young ones do again, but where you had basically 0% checking accounts with a fee. I've moved into an environment where there was interest-bearing checking account, and we are back basically now to a 0 interest checking account with hefty fees. Why is that? Because the credit money has one big advantage for the general population. It creates the mirage that you can have payment systems for nothing. Because the money is created by credit extension, right? The money creator has an income, namely the spread between the credit and the deposit. And as the banking sector was liberalized in the course of the 1980s, the banks were able to compete for the depositors. Why would they compete for the depositors? Because they were afraid that once they create a deposit, the credit extension, the deposit would move to another bank and then they have to borrow it back. So for them it was good to have the depositor remain with them, and therefore they gave this incentive and shared part of the seigniorage with the depositor in a sense. This created in people's heads the idea that banking is a free good. And then they were made pay up in the financial crisis. Yeah, so all the citizens stormed and said, how can the government bail out these bad banks at our cost? Yeah. Well, the answer is because they were basically taking in little payments from the banks so that they could have free checking or interest-bearing checking, free little payments, so small morsels of bread, if you want, so that they remained content with the system. And when the system collapsed, they had to foot a bill of several times the gains that they had made. Now, actually, there would be an ideal time to change over because people do not get any return from the credit system. We are basically in a stealthy way. We are actually moving step by step to the 100% money systems, you quantitative easing and central bank balance sheet expansion, yeah. But people don't understand it, otherwise they would say, okay, lock it in.
Okay, let's put forward another statement. Oops, I went back. Okay, that's the statement. I think I read it in this form or other from the proponents of sovereign money. So the statement goes, sovereign money will make the job of central banks regulating the economy easier. Who thinks that's right? Yeah, slightly more reds. Yes, you want to add something?
No, yeah, it's against two statements. On the one hand, you're saying that it will make the regulation of the economy easier with sovereign money, and on the other hand, you're saying that it's like the job of the central banks.
Okay. Mm-hmm. You want to pick up on that differentiation, Frank?
Yeah, I think you're exactly right. But for just the sake of conversation, let's keep going. In terms of regulation, I think it will, the idea of sovereign money is not, the concept is not fully, completely thought out. And what we need to do is get probably, if we wanted to implement it, get probably, 20, 30 of the best, chief economists and stuff, and put them in a room, force them to talk about it for the next 6 weeks and plan out how it would work. Yeah, might not actually be a good idea. Now, whether it would simplify, I think it would actually simplify a lot of the regulation. Things like Dodd-Frank, what's that, 8,000 pages right now? And there's plenty of loopholes and issues around those kinds of things. So there are certain parts of regulation that I think would definitely be simplified. But I think it's also important to say that there's other parts of the regulation that, one, we haven't necessarily thought about, and this needs, future thinking. So there could be aspects of regulation that need to be increased. And the other is that I wouldn't necessarily say that there would really also be, that regulation would be easier in a sovereign. I think the system would be simplified, but there would definitely be different things that would come up that would require regulation in the future, and it would be a mistake, I think, from our part to kind of say, oh yes, because sovereign money is there would be, better regulation. It would be simpler. We should implement it. That's not really the main reason for doing a sovereign money system, and it shouldn't be, put forward that way in my personal opinion.
The most important reason would be what then?
Oh, those two things that I was mentioning about full protection of the payment system and a debt-free source of income coming into the economy.
Okay.
Ask a question?
Sure.
So about your reply, basically, we have thought that with sovereign money, the job of the central bank to regulate the economy would be easier on one side, maybe not on the other. The one side, which would be easier, if I understood correctly what you said before, is on the fact that the central bank would actually regulate directly the amount of money supplied.
No, yeah, that's not necessarily regulation. I would say that's but. Yeah. Oh, okay. We're talking about the rules that govern how institutions work in the financial sector and the laws. Yeah. In my
Just thought about regulation.
But I'd definitely say, off of what you've just said, the payment system, the regulation there would be much simpler than it is currently.
Yeah, maybe the statement should be fine-tuning the economy. I mean, that's kind of what central banks mostly do when they talk to the public. They say, yeah, we raise interest rates because it's running hot and so on.
Yeah. Yeah, well, in terms of the calculations of interest rates and how you want to influence aggregate demand, in a sovereign money system, it would be exactly very much the same way as it's done now, but you would have to calculate it differently. So, for example, if the government of the day said, look, if we need to stimulate aggregate demand, we want to use a citizens' dividend fund, give people checks at the end of the month, then the central bank, before thinking about aggregate demand, would have to take that into consideration. If the central government said we want to do a tax cut, then this would have different implications for how the central bank would think about that in the context of aggregate demand.
Your thoughts, Thomas?
If I were Mr. Draghi, I think I would have voted green, because Mr. Draghi thinks, and I name him for other central bankers of his mindset, Mr. Draghi thinks that it is the job of the central bank to fine-tune the economy. And if he thinks this through, and if he would not be speaking in a politically constrained environment, he would say that sovereign money makes it easier, because he would not have to go through the credit mechanism to create money and pump it into the economy. This is sort of the direct infusion of money into the blood circuit of the economy. So if I think the job of the central bank is to regulate the economy, then I think this would make it easier. But I think the job of the central bank is not at all to regulate the economy, because it can't regulate the economy. Any effort by the central bank to regulate the economy always, everywhere backfires and creates bad results. This is why I have a lot of sympathy with the sovereign money movement, a lot of sympathy with the Vollgeld-Initiative, but in the last slide, I part company. I say, oh God, you're all right up to that point, and then when it comes to say, sovereign money will make the job of the central bank so much easier, I say, oh God, no.
All right. Want to add anything? Or? I mean, I find the point quite interesting to say that central banks should sort of keep their hands off fine-tuning the economy altogether. Do you agree with that?
No, I don't. And, well, there's a few different reasons why, but if we can... The idea that the government, that the central bank might, create money for vested interests, it's important to realize that can happen in the private sector as well as in the exact same way. And if I think about actually how the ECB works, and if we're talking about central bank independence, and the idea of central bank independence was for the central bank to be independent from political interests. That's what they were supposed to be, right? But if you look at the ECB, in my opinion, it is not independent of the financial markets. You look at every single one of Draghi's discussions, and every time he makes remarks, there is always a bing or a but, and it's always and it's usually in response to something that's happened in financial markets. So yeah, I think that's an important way to think about it. The issue for me, I guess, and why I'm very passionate about the central bank bringing in debt-free source of income into the private sector. Now, if you wanted to bypass the political interests, you could just give the check in the mail to everybody at the end of the month. Yeah, if that was your issue and you only wanted to stimulate aggregate demand, then you just do that. Yeah, and just to be clear, the central bank would only decide how much money to create and when to create it in terms of reaching the monetary policy target. All right.
What is the monetary policy
So,
target?
well, that's well, currently it's 2% inflation, but
is that what you would do?
Well, no.
Would you do inflation targeting in sovereign money?
I would leave it up to the elected officials to decide how to do it.
What should they do if you had to elect them? Who would you elect?
Oh, I'm actually a Green, so it would be first
A
of all...
guy who says, I'm going to go for inflation targeting, would you elect him or would you not elect him?
No, well, like I said, I'd go for... I'm a Green Party. I'm a member of the Green Party.
What does the Green Party elect?
I would go for some kind of monetary policy target based on a steady state economy.
What is? How do you translate this into an operational rule?
Yes, well, that's the question. I haven't necessarily completely thought that through. But you could have the target of the central bank be inflation, employment, wages. There's a whole bunch of different people that have thought of different ways, and to be honest, I haven't really completely focused on that. But the point, it's more about getting aggregate demand to where you want it to be, to get economic activity to where you want it to be. You can use the different indicators, but the point is, if you want to get economic activity to where it has to be, or where you want it to be at a desirable level, then you can use a central bank without getting debt, without having to stimulate private or public debt. So just one second. In the aftermath of the financial crisis, what happened was there was austerity and then low interest rates and QE. There was no way to increase spending. The only way to increase spending and get really economic activity going was to try and export. And in the UK, we were not going to turn into net exporters overnight. We've got a net trade deficit. So the only way to stimulate aggregate demand in that respect, when the government's running an austerity program, is for the private sector to go into more debt, even though that was what caused the financial crisis in the first place.
So if I understand you correctly, then you would be saying that sovereign money or 100% money is good because it allows a central planning authority to have a tighter grip on the economy and to manage it more tightly. Against that, I would say that everywhere and every time central planners, sorry, this was a Freudian misspelling. Central planners have always, everywhere failed to correctly manage economies. And to empower a central bank to give them even more power creates even more problems and trouble. Right now, we are already in a centrally planned global economy because the central bankers try to guide the banks to do what they want. And if I take your line of thinking further, then it would be saying, let's take out the banks so that the central planners can directly steer the economy, right? This is even more Soviet-style central planning than we have now.
Can I respond?
Yeah, sure.
Yeah. So if aggregate demand is at its desired level, the central bank does nothing.
What is that?
Well,
what are you talking about? Aggregate demand?
Spending.
So if the government buys 50 tanks for a totally arbitrary, sorry if I'm interrupting you, but this is
fine.
If a government buys 50 tanks for a totally arbitrary price from a weapons manufacturer, you get a certain sum. And if the free market, the kebab shop that you mentioned, has to sell so many thousands of millions or hundreds of thousands of kebabs, is that the same for you? Is aggregate demand just a number for you? Do you understand my line of thinking? I'm saying you're aggregating something that is diverse. Diverse as there are many people on this planet. So you're saying, I don't know, you're a resident of the UK, I take it?
Yes, yeah.
You say that 50 million, or how many of you are there? Something like that.
Okay.
You're saying that 50 million people aggregated, and then there's a desired level. Who ranks desired level? How does that help the kebab shop if the government buys some more tanks? To use my example here. This is Keynesian thinking at its best here.
Yeah.
Yeah, I think you should.
No. I'm totally. No, if you're asking, I don't want to make this about me. I had a question about the Frank's concept.
Okay, let's have Frank answer the question of the gentleman. I think it's a good question. Maybe you have
well,
I think on the
first
the aggregation.
Well, I just want to first respond to Thomas, which is, like I said, I'm agreeing, and I think that our planet is going, we're heading in exactly the wrong direction. And yes, for that reason, I do believe we need some more government control. Sorry. Okay, well, sure. About the being more of a post-Keynesian, this is the way I think. And yes, you're right. We have to be careful about how we aggregate different sectors and think about things in that respect.
You're answering my question, so I shouldn't interrupt. But careful is not good enough. I mean, to your credit, no pun intended, you are honest, very honest about things you don't know, and I appreciate that very much when some difficult questions are asked and say, I haven't really thought that completely through, and I appreciate that. But I think you're onto something very important here with the aggregation. That is something you know, the desired level. You cannot state for me what the desired level for me should be.
Sure, but I mean, obviously we have to have like certain goals and certain ways that we want the economy to be run as collectively as a society. And look, I'm not going to get into philosophy. I promised myself I wasn't going to get into philosophical discussions between, you know, the way post-Keynesians and Hayekians think about these kinds of issues. I mean, because then we get into different.
We have a question from the back here. I'd like to take that question. Yes, please.
No, I only wanted to wean in on this debate because I think it's really fundamental. On one side, we have the more libertarian view who thinks the economy always goes to full employment. There's no need for stimulus. And then there is, as you say, maybe more the Keynesian or post-Keynesian view that there are multiple equilibria and we could be below. We could not use all resources available in the economy, so we don't use all capital, we don't use all of the labor. But more from the libertarian view, he said there's also the possibility that we just give at the end of the month some money to everyone, and then the kebab store guy could decide what he does, and everyone else could decide what he does. But then we still have the difference that some people think there is a possibility for an equilibrium which is below full employment or below potential, and some people think, you know, the best thing is just to leave it by itself, laissez-faire, and I think that's the fundamental difference. But there is one idea in his saying to how he want to implement it in a more liberal way by saying, let the people decide how they spend it, and I think there is like kind of a point of agreement, maybe to some extent.
Okay, thanks for the statement. Let's put another statement forward. Yeah. It's closely connected. So, it goes like that. If the state would take full control of money creation and distribution, as in the Sovereign Money Initiative, we will ultimately have hyperinflation. Many people think that. Thomas, would you like to say something about that?
Maybe. I just don't know. And I also don't know the time period. What I can say from historical observations is that the tighter the control of states was over money, the more often it was abused. I mentioned already the example of the Romans, right, who debased the dinar. There are many other examples. For instance, in the Middle Ages, the French were relying primarily on money debasement as tax revenue, i.e. seigniorage. Why do we call it seigniorage? Yeah? It is the income of the seigneur, the master who is able to issue money. So if you go through history, every time and everywhere, the privilege of issuing money by authorities was abused to fund their interests. So I don't know whether it will create hyperinflation or not. I only point to historical evolution.
I just realized that we forgot to vote on this statement. Yeah. So let's see the cards. Who thinks the statement has something? Because actually, this is along the official line of arguments that was put forward in the response from the Confederation to the Vollgeld-Initiative. It's they claim that the Confederation claims that there is a danger of inflation.
Basically, so they're saying that they will use it to create money.
So the money will automatically.
The government, right? Like we said, the Confederation.
Yeah.
They're saying that they will abuse the power.
some sort of yes. That's what they don't trust themselves very much. Okay, let's see the cards. We have a lot of red cards and a double red and green card. Okay. Okay, Frank, what do you think about it?
Well, first of all, just to be clear, we did QE and we know that there hasn't been hyperinflation, right? So clearly it's a bit more difficult than, well, you could say there's been inflation in financial markets, maybe, or in property sector, which I 100% agree with and campaign for. Now, the point is that it demonstrates that it's a bit more complicated than, oh, if we all of a sudden just increase the money supply, there's going to be hyperinflation. It's, in my opinion, and I'm almost hesitant to make a post-Keynesian kind of statement at the moment, it depends on the productive capacity of the economy and if there's idle inputs in the economy and whether these are being used when through the state spending. So if basically you're not using all the inputs in your economy and you try and spend money into circulation, you should basically boost the productivity, put those idle inputs to full employment, and then once that's reached full employment, then eventually, if you keep on creating money, then there would be inflation, depending on how you use. But if you used the money then also for infrastructure projects, or you're also then just completely enlarging the productive capacity in of itself through these infrastructure investments. So it would depend also then how you would use this money. If you do, the reason we have inflation, for example, in the property sector, is because we've got a limited supply of goods whilst we're creating money and expanding the money supply for this finite amount of goods.
If I may add, this is no argument against monetary reform at all, because this argument basically says the credit money system is ineffective in terms of government control, right? I mean, if you believe this, that government control will lead to hyperinflation, you should actually abolish the credit money system, dissolve the private-public partnership of money production, and make it a private affair.
Do we have time for another, or how are we in the schedule?
Would you like to listen to another statement, or would you prefer to have an aperitif now? So green is for another statement, red is for aperitif.
Okay, that's very nice. Good. Okay, here's one. Cryptocurrencies or other private money will replace normal currencies anyway. We have 60–70% red. Okay. So why could that be the case? Why do you think people doubt that cryptocurrencies will replace our normal money?
I think well, I don't know why people now have voted mostly in the other direction of the question, but I think it will. Cryptocurrencies will replace paper money. Why? Paper money was a financial innovation in Europe in the 17th century, imported from China, because paper money facilitated payments. Rather than having to carry around chests of heavy metal to make a payment, you could now carry around a paper note, perhaps even in your pocket, and that facilitated simply the payment. This is how paper money came in. It was a financial innovation. Now we have cryptocurrencies, a financial innovation. Such financial innovations which make life easier, because cryptocurrencies you are able to make payments peer-to-peer. You don't need banks anymore to make payments. It makes life easier and payments cheaper. And such innovations can only be prevented if the government bans them.
Frank, what do you think? Do you agree with the audience?
I'm kind of, I do think, yes, over time, if the current monetary system stays the way it is, I wouldn't say that bank money or private money would stop existing, but I definitely think you'd see an emergence of alternative currencies for sure, just because of the way technology evolves over time, and I think it's important to say that banks are starting to use distributed ledgers and these kinds of technologies themselves. So my thinking is more wait and see.
As a Swiss citizen, I have to say that I'm quite happy with the money I'm using with the Swiss franc. I don't really see a reason why I should be storing my money in bitcoins, if not for speculative reasons, than in Swiss francs.
Was that aimed at me? Well, yeah.
Yeah,
or,
maybe,
well, if you compare it to a sovereign money system, then well, it depends what you want to do with it. But if you wanted to if you were trying to invest and save your money and make a return on it, that would be one thing. But if you want to have a fully protected payment system, then yes, I would prefer having my money then at a bank account that has that exists on the central bank's balance sheet.
I think we have to distinguish between the technology and the monetary system, right? I mean, the technology, I think, will make its way unless it is spent by government, because it's, it is as expensive to make a transfer from here to Kabul as it is from here to Basel when you use cryptocurrencies. All you need is basically a mobile phone and you send it off. Whereas today, if you would want to get money to Kabul, check how much they would charge you for that service. It would be quite a bill, actually, that comes to you. So such technology can really make payment system hugely efficient. And as I say, it's only government bans that can prevent that. And the same thing is, I think, when you come to thinking what cryptocurrencies will do to private money. Only government bans will prevent that, because why wouldn't I, if I were Amazon, right, if I were Bezos, why wouldn't I create an Amazon coin, a cryptocurrency, and say, dear customers, why don't you come here on my platform? I will have my suppliers more price their stuff in Amazon coin, and you can shop on my platform all over the world. You will have supplies from India, from Europe, from wherever, from the US, all priced in Amazon coins. You have complete price transparency. So use your dollars, your euros, make an account, put it in, and you have complete transparency. You can shop around the world with no problems whatsoever. Then comes the guy from PayPal and says, but we actually have much more experience in such things. Look, if you come to PayPal, we issue the PayPal coins. By the way, if you come to PayPal and we expand our customer base, you will be rewarded sort of airline miles. The more there are, the more you get, right? Then comes Facebook and says, look, we are a great community. We have billions of people. These billions of people want to interact socially. They don't only want to make likes or dislikes. They also want to exchange payments. We can do this. We have a perfect system. Here, come to me, Facebook coin. And on and on and on it goes. So why shouldn't I have, as a customer, a choice of all these? Now you say, you trust in the Swiss franc. Okay. So you take your Swiss franc banknote someplace and say, I'd like to pay something, right? And say, what's that? A Swiss franc. What is Switzerland? Oh, it's a small country in Europe, and this is the money they issue. Why should I take it? Well, you see my point. Everyone will know Amazon coin or Facebook coin, but Swiss coin will be a small fly on a big scale.
What about you, Frank? Would you use an Amazon coin to pay on Amazon, and possibly also for a lot more purposes, if they issued one?
I don't really buy things very much from Amazon, generally speaking. And it just brings, and it brings to the point, though, we can make that the state is corrupt, and you can talk about that, and we can talk about the private sector being corrupt. and who we trust more, the democratically accountable institutions or the private ones who are accountable to their customers.
Their coin, then we have a choice. We can have a green coin,
Yeah.
we can have a state coin, we have an Amazon coin.
Like I said, I do kind of agree with that. So don't worry. My issue, I guess, with that would be is what happens when? So what can you pay your taxes in these alternative currencies? And what happens when you start paying your taxes and what that does for the government? And then all of a sudden, what happens if one of these currencies becomes bigger or more powerful than the actual government's currency? And then the government completely loses power over its currency, and you have Greece. No?
We have a question from the top right over there. Okay, so this is the idea that central banks should basically not be only banks to the banks, but also be banks to the people,
absolutely.
Basically.
Great idea.
There's only one issue there, and I like this idea, by the way. And my former colleague has gone and worked at the Bank of England on their digital currency team, mainly for that reason. The primary issue, from my understanding, and Thomas probably knows more than I do, is that during boom times, everybody's going to move to the alternative currency. Then all of a sudden, things get sticky, and everybody's going to go to the other one. And that kind of volatility could have certain negative impacts. And that is what, from my understanding, if you look at the Bank of England's recent report on digital currencies, they've made that point Mark Carney did.
I don't think that this is a problem, Frank, because what you should have is free choice. When I say currency competition, maybe I was not quite clear, and I should have been. I never would ever ban sovereign money. It should only compete with private money. And I think your point, Frank, I don't think is really a problem. This is this debate about narrow money and safe money and other money. If you have free banking, and that goes along with basically having a non-debt money, right? A Vollgeld, whether this is private or public. Once you have 100% money in whatever form, you can and should have free banking, which means that banks must be allowed to fail. In that sense, you are free to choose the bank that is matching your temper. If I'm a very risk-loving person, right, then I go for a bank which has a very thin equity cushion. And I take the risk that this thin equity cushion is quickly eroded when they have loan losses, and I basically then own the credit they have extended. Because in a free banking system, the equity part of the bank is just the first loss insurance. Right? If a bank has 4% equity backing of its credit extended, then you have a 4% first loss insurance. Once the losses go over 4%, the depositor takes over the credit portfolio. If I have a bank with 10% equity, I have a higher first loss insurance. So I can choose the bank that suits me on my risk appetite. And I think people should be then held responsible for the decision to make gains, also when the gains lead to losses. This is an essential element, I think, in a market economy, that we have freedom of choice, but also responsibility for the choice we made.
I 150% agree with you on that. Just to clarify kind of what I was saying was under the current system. in terms of having a digital cash and an alternative currency, and I was thinking more along the lines of also banks being allowed to create money ex nihilo. That, in that respect, I think then you'd have volatility in those kinds of issues, whereas if we're talking about having a sovereign money system alongside a competitive currency, that would be slightly different, I guess. Yeah.
We have another question from over there.
Thank you. I actually think that statement here is pointing directly at the heart of the problem, and there's never going to be actual competition between cryptocurrencies, other private money, and, let's say, government licensed money, as long as there's two things, and that's tax being collected in a given currency. So you're forced to use that money if you need to pay taxes, and as long as there's a concept of legal tender, which means you're forced to accept that money. So that's basically government giving a factual monopoly or stifling competition that might be actually healthy.
So just to follow up, I mean, is there a solution to this problem from your point of view? I mean, should you abandon the concept of legal tender? Should you kind of abolish taxes altogether, or make them?
I would say yes, but I know it's not a very.
Or in what currency would you then pay your taxes? Because there need to be some taxes, I guess.
I guess one can have a different view to that, but that's beyond what we're discussing.
Yes, okay.
I can understand your first point. What makes you say that the existence of taxes having to be paid in specified currency? I fully agree with your second point that legal tender needs to be abolished, and that's point number one for all of us. But if the government says we want you to pay in Swiss francs, where's that problem? The problem, I think, will be for that if you have currency competition, the state-issued currency, Swiss franc, will decline more and more in competition with private currencies. That would be my prediction. Historical comparison would be the fall of the Roman Empire. There's a podcast, you can Google it, Inflation and the Decline of the Roman Empire, or something like that, from 1984, which describes this very well, that at the end stages of the Roman Empire, they, how do you say that in English, they clipped their coins, or they made the silver content and gold content worse and worse in the officially issued currencies. And towards the end stages, they didn't accept their own coins anymore for payment of taxes. They said, no. This is one sesterce or whatever. But for me, when I need to pay my soldiers, they know that there's not much gold in there. So for payment of taxes, I want the good money, the private money. Is what I would suggest. So I don't agree with your first point that that's a problem. It's a problem for the state, yes, but I don't have a problem with that. If they suddenly have to say, like the Roman Empire, well, it's our money, but actually for payment of taxes, I'd rather have the other one.
Yeah, absolutely. That would actually be a great deal if the state would accept debased currency as tax payment. I would keep everything in the other currency, and when the tax payment day comes, I pay them, and then I go back and use the other money.
If the Roman Empire is too far back, I mean, take the Venezuelan Bolivar or anything. I mean, you'll see the point.
Yes, you wanted to add something?
Just a quick tip. I think that I will never see in all my life this cryptocurrency. And I think also my son will never see this cryptocurrency.
It's already there, Bitcoin.
I think completely replacing let's say, the normal money.
Well, this is what
So
you mean.
I think for me this is too far, and this is an academic discussion. We are at the university.
Okay, let's have maybe a last point. I mean, we can go on forever if you like, of course. Oops. Hold on. Okay. This is also an official argument. Okay. In the documentation, in the eidgenössische Vernehmlassung, no, what's it called? Yeah, in the paper that came out from the Bund, and the argument is that small countries like Switzerland shouldn't be used as a testing ground for new monetary systems. make up your minds.
Shouldn't, yeah?
Yeah, shouldn't. So if you think, yes, they should be used as a testing ground, then you can put the red card, yes.
If they should,
Yes, exactly. Double negation. Okay. Many red cards. Yeah, that's the meaning of the red card. Yeah. We had one green card over there. I like to hear. I like to hear your points, your opinion. Why? In the middle over there. Maybe you like to say. Yeah, you. Oh, okay. I think I saw your green card. Okay. So.
I think they should be used as a testing.
Yes.
Yeah, I think it would be great. I mean, if you want to test something, you do it in a small environment before you go roll it out large. And if this is really advantages of advantage, then why should Switzerland forego the first move advantage? It would be crazy. You can benefit before anyone else can.
Of course, assuming it is a benefit. That's the tricky thing about testing. You never know if it's how it's going to come out.
And
maybe we shouldn't test it because we have so much to lose compared to other countries. I think that was a mistake in the beginning from the introducer, because if you see the historic comparison of the economic growth in the last 100 or 200 years, we have never so much wealth than today. So, and the premise of your statement and also of your statement was that we have to fix the financial system. It's completely rotten. And I don't think it's completely rotten. We have to maybe change it a little bit. But if you change it, a good system which produces a lot of wealth for all people on the whole planet. So it should just change a little bit and maybe not make a big change in a country like Switzerland.
maybe.
No, I mean the financial system is part of the economy. Yeah. Can you agree on that? Yeah, of course. Yeah. And we have more wealth than 10 years ago or 100 years ago. All the people. We have more people.
There's always a counterfactual. We don't know how much wealth we might have in a relatively free Switzerland without the Swiss National Bank doing the September 6, 2011 craziness and the January 15, 2015 craziness. We don't know how much that regime uncertainty has cost us. I agree. We're well off here, but we could be even better.
Okay, maybe here's a follow-up question. Would the sovereign money initiative or sovereign money, would that be a big change or would that be a relatively small change? Maybe you can tell us that.
Sure. I just wanted to comment on the last one because I was a bit surprised that everybody was kind of like, we should test these on smaller countries. I definitely believe in trial-based testing, so I'm on that. Sovereign money would be a big change. I don't think that it should be put forward as an idea that is, very simple and non-complex. It would be a big change, and I think it would also need, to an extent, it would involve different changing norms and institutions as well, cultural norms and institutions as well. For example, ideally, the way I'd like to think is that if you put your money into a savings account, you start to really look at where you're putting your money in the savings account. And I think that involves a very different way of thinking than we do now. Hardly anybody thinks about what their bank is doing, or they a lot of people do, but not the general majority of the population might not care if their bank is funding weapons in Iraq or other kinds of things. So that's just an example, and I think that it would be quite a big change. I think it would be, there's different ways you could do it, and it can be rolled out overnight or over a long period. But I just want to say, especially as somebody who's promoting sovereign money, that I'm not unaware about the fact that it would be a big change, but that should not mean that we shouldn't do it.
Yeah, sure. I have to say, I always thought that the Vollgeld-Initiative, it would be much better placed in the euro area. I think it would run in open doors there, and I can see that there is a cultural resistance against change of something that most people here perceive has worked well for them. But if you go to the euro area, I think it's almost a no-brainer. It would be for an economist a no-brainer to do it, right? We have a stateless money that is presently run by an unelected bureaucracy, namely the ECB Central Council. And they are struggling to give a public guarantee on deposits in euros, right? You have in the euro area, you have now, when you take them literally, you can only make deposits of 100,000 euros that are really government guaranteed. Then ask a mid-sized company, what do they keep their cash that they need to use for working capital purposes, to pay salaries, to have cash reserves for acquisitions, and so on. They are at a loss. Now think about that the ECB would start to offer a safe deposit. Define safe deposit simply as a deposit backed 100% by reserves, and the person could use that. Now you say this is science fiction. No, it isn't. The ECB has already, I think, acquired. Now I may be wrong about the exact number. Let's say a significant fraction already of M1 is basically available in terms of reserves. So they are on their way. If Mr. Draghi goes on with QE, he will soon have covered an even larger fraction of M1 with reserves. So the simplest thing to introduce deposit insurance in the euro area would simply be to introduce a safe deposit, i.e. one backed 100% by reserves. No government guarantee needed, nothing. Right? We would have banking union, but they don't get it.
There was a question from over there. So the luxury of not having to worry about the money in your bank account, is that...
The bank actually is providing to you as a private customer.
Yeah. Do you see that as an argument for sovereign money or against it?
I suppose what I was just saying is that I would hope that there is an institutional change that maybe comes along with it. And I'm talking mainly about savings here, not necessarily about current accounts, to be clear. And that is where you want to put your savings and how that would, then be invested. And one of the ideas, hopefully, is that would be more responsible and ethical. And this could be, and I would say that's a benefit of sovereign money, but it would require that institutional change. Yeah.
I don't think this doesn't really tell about the sovereign money concept, because right now you can do it as well. You can choose your bank.
Yes, so the point is, though, because you have deposit insurance, and those kinds of things, and the subsidies, nobody thinks about or cares about actually where, and takes the time to think about where their savings is going. Yeah, that's my point. Yeah.
Another question from over there.
Just another quick tip. Switzerland does not want to use euro. Do you think it's ready to test a new monetary system? I don't think so.
Okay, let's have a final vote, and of course you can guess the question. So if sovereign money, probably the initiative will be voted on, I think 2018, is that right? 2018, okay. What are you going to vote? Are you going to vote yes or no? I mean, it's a secret normally, but maybe here in this environment we can share. Okay, let's do that after. Let's vote on sovereign money first. Yeah. On the Vollgeld-Initiative, do you think green light or red light? You're a Norwegian, or? Okay. Okay, so it looks we have definitely more people from the Hayek Club in this audience than from the Vollgeld-Initiative. So I don't know, what is the correct question that we have to ask if we want to vote on free money? Or
I think the first question to ask is, do you want to go on with the present credit money system, or do you want to have change? This was what these two gentlemen sort of were addressing. And the second question is, if there's a majority for change, do you want to have currency competition, i.e. private plus public monies competing with each other, or want to have a public monopoly, i.e. sovereign money? This would be the two questions. No?
Can we frame it in one?
Yeah, this is, no, two questions. You have to do it in two. Who would be in favor of keeping the present credit money system or making a monetary reform? That would be the first question.
Okay, so first question.
Favor of monetary reform would be green, and keeping the present system would be red.
Okay, favor of monetary reform. Okay, many greens. Many.
Yeah. Favor of monetary reform.
Okay, that's so many greens. So it means we can ask the second question,
and
right?
The second question would be private money, currency competition. Let me phrase it this way. Currency competition, I make it red so that I'm not partial here if it's green. Currency competition red and sovereign money green. Sovereign money monopoly green. So currency competition red and sovereign money monopoly green.
Okay, so
I think it's also just very important to clarify that the two can coexist alongside each other, and
no. The question was sovereign money monopoly versus currency competition.
I understood that.
So then we would have to vote. Yeah, but sovereign money monopoly means.
Sure.
Okay, I said, yeah. Sorry.
The only point that I wanted to kind of end on is knowing that yes, that we can have a full monopoly of sovereign money, and you can have competition. But the point is, they can also work alongside each other. And
but then we don't have monopoly.
The state bans.
Yeah, the state bans everything else. That's a monopoly.
If it's not banned, then it should be a
then it's not a competition.
Okay, then I understood that. I misunderstood that. Sorry, I thought we were talking about alternative currency. Yeah.
Okay. So I suggest the discussion whether we can have a coexistence of free money, sovereign money, and etc. We shifted to the opera. I want to say thank you to Thomas Meyer and Frank Van Lerven for coming here and sharing their views with us. Thank you. And that was very nice.
Thank you very much.